Welcome back to Alpha Recap. Morgan here. Today we're unpacking a market session that broadened out in a pretty meaningful way. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to dig into from today. Earnings, policy noise, and a widening rally.
All right, let's start with the headline moves. Markets closed up across the board. The S&P finished the day up about 0.8%. The tech-heavy Nasdaq 100 was stronger, finishing up about 1.3%. And small caps outperformed, with the Russell 2000 rising about 1.7%.
So yeah, tech-led. But the interesting part was small cap participation. That's what changed the tone. It wasn't just a mega cap tape. Right. When chips and AI-related names push the Nasdaq higher and the small cap index follows, it signals broader risk appetite rather than a concentration in the usual suspects.
Let's talk drivers. Earnings were a big piece. Advanced Micro Devices reported a quarterly beat and raised guidance, which helped the semiconductor cohort. That propelled a lot of the AI compute narrative.
Yeah, and Supermicro Computer also rallied after results that reinforced demand for high-density servers. Together, those two headlines really lit a fuse on the chip suppliers and enterprise infrastructure names.
But it wasn't all one-sided. Oracle slid after management flagged sizable AI spending that could pressure near-term margins. And Palantir dropped despite decent revenue, showing investors are fixated on guidance and execution.
Those were reminders that heavy capex for AI can be a double-edged sword. It supports long-term revenue potential, but can dent margins in the short run.
So, what really stands out here is how earnings nuance mattered. A top-line beat wasn't enough in some cases. Forward commentary and margin implications drove outsized moves.
Exactly. Analysts note that guidance tone and contract cadence are often more impactful than headlines alone. You can have revenue beats and still get punished if the outlook suggests higher spending or softer margins.
And beyond company reports, we had a policy headline that traders were talking about all day. The SEC proposal to change public company disclosure cadence, potentially reducing mandatory quarterly reports.
That's a structural story. If adopted, it could lower reporting-driven volatility, but raise the premium on alternative disclosure practices and real-time management communication.
Right. And the other thing is it forces analysts and traders to adjust their workflow. Fewer forced updates from companies means more emphasis on conferences, calls, and selective filings.
Which could make earnings and guidance even more of a focal point when they do come out. So the informational environment changes, even if the markets breathe a sigh of relief on fewer mandatory reports.
Let's walk sector by sector. Technology and AI were the clear leadership story. Chips, server suppliers, enterprise infrastructure all helped the Nasdaq pop.
And that tech strength spilled into related software and services names, but reactions diverged based on margins and spending commentary.
Energy and materials also had a strong day. APA Corporation led the energy group higher amid firmer oil fundamentals, and materials rallied on M&A chatter and supply concerns.
Yeah, commodity fundamentals and deal talk are often underappreciated drivers. They can flip a group from sleepy to leadership territory quickly.
Financials were mixed, but generally constructive, where loan growth or fees beat expectations. Utilities had narrow gains tied to solar and grid equipment projects news. Industrials and real estate moved higher on manufacturing and rent dynamics in spots.
And consumer, media, cannabis, pretty company-specific moves. That's another sign of a breadth pickup. More sectors showing meaningful winners and losers, not just tech.
Short reactions. Yeah, absolutely.
Right.
Hold on, say that again?
I mean, when you step back and look at this, the internals were constructive. Tech-led, yes, but breadth improved as small caps climbed.
Let's touch technicals briefly. Market internals suggested a healthier advance. Mega cap leadership plus a better move in small caps reduces single stock fragility, analysts note.
Traders will watch whether momentum holds above recent consolidation ranges. If pullbacks find support near breakout levels, the technical case for continuation strengthens. If not, shorter-term profit-taking could appear.
Okay, moving into macro context. There wasn't one big data print today, but the backdrop remains inflation and labor market monitoring. The short story? Markets are pricing a cautious Fed, waiting on incoming CPI and payrolls for confirmation.
Analysts note that if inflation cools and labor tightness eases, markets could price in rate relief sooner. Conversely, any hawkish surprises could quickly remove today's risk-on bid.
So what are the near-term catalysts to watch? Earnings flow is first. More tech and industrial reports are due this week, and the tone of guidance will be critical.
Macro calendar is next. Inflation and employment prints will influence rate-sensitive sectors. And then Fed chatter and the SEC disclosure reaction will shape volatility and how companies communicate.
Don't forget commodity moves. Oil and base material prices were part of today's rally, and continued strength there could keep energy and materials in the leadership mix.
Honestly, I was a bit surprised by how much small cap stocks participated. That's not always the case when tech leads, so it's worth monitoring if that broadening persists.
Good point. A couple quick callouts on individual movers. Advanced micro devices and super microcomputer were big winners on AI compute demand. DuPont had a beat and raise day and helped lift materials. APA led energy names. On the downside, Oracle and Palantir highlighted the margin and guidance sensitivity in AI spend stories. Fiserv slipped on operational questions, and Biorad got a positive note from an investor re-entering the name.
And crypto-related equities picked up some speculative interest too, reflecting renewed focus on digital asset infrastructure and tokenization plays.
So, final takeaways before we sign off?
First, the market closed with a broader rally. Tech-led, but small caps followed, which is constructive. Second, earnings nuance mattered. Beats plus cautious guidance or heavy capex talk produced mixed reactions. Third, policy headlines, especially the SEC disclosure proposal, add a structural layer that could change how volatility shows up.
To sum up in one line, momentum was constructive, but the rally needs confirmation from upcoming earnings and macro prints, particularly how markets absorb AI-related capex and margin dynamics.
Analysts note scenarios on both sides. Continued beats and cooling inflation could reinforce the risk-on path, while margin disappointments or hawkish macro surprises could tilt things defensive.
Thanks, Tom. Short reactions to wrap. Yeah, that tracks.
Thanks, Morgan. Good rundown.
That's our show for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back with more after the next market close. Take care.